All right, welcome to Talk Tickers. Today, we're breaking down Jones Soda's Q2 2025 earnings. Now, on the surface, things looked pretty good, but the market? Well, the market barely reacted. We're going to figure out exactly why. Okay, so let's get right into it. Jones Soda came out and delivered. They posted a GAAP profit of a penny per share, which is, a massive swing from the loss they had last year. But the market's reaction? A measly 0.1% bump. A profitable quarter, and Wall Street basically just yawned. So what's the deal? Why did a return to profit, something investors usually love, fail to move the stock at all? That is the question we're answering today. And let me tell you, the answer isn't in that headline number. It's buried deep in the details. So, first up, we have to deconstruct that bottom line. We're going to unpack the one-time gain and, maybe more importantly, the real operational improvements that tell the true story of what's happening at Jones Soda. Here it is. This is the number that drove the headline. That profit was almost entirely powered by a $3 million gain from selling off their cannabis business. Now, this was a really smart move. It injected a bunch of cash without having to dilute shareholders by issuing new stock, and it really simplified their story for investors. But this number? This tells you the real operational story. Management wasn't just selling off assets. They were seriously tightening the belt. Dropping your operating expenses by 26% year over year, that shows some serious discipline. That's execution. And that cost control? It had a direct impact right where it counts. Their adjusted EBITDA, which is a really key measure of a company's operational health, improved by a whopping 48%. So if you just forget that one-time gain for a second, the core business is absolutely getting leaner and a whole lot healthier. Now, it is crucial to understand exactly what they sold here. They got rid of the complex, state-by-state regulated cannabis business. But, and this is a big but, they kept their federally compliant HC9 THC line. Why does that matter so much? Well, because HC9 products can be sold across state lines, and that unlocks a massive advantage for distribution and for scale. So this all brings us to their new strategy, which they're calling Simplify to Grow. And it's exactly what it sounds like. It's all about focusing their time, their money, their resources on the core brands and the initiatives that can have the biggest impact. And really, it's a classic 3-step turnaround playbook. Step 1, you sell off the assets that are just a distraction. Step 2, you get your costs in line. And step 3, you take that capital and you reinvest it into your most promising areas for growth. Simple, but effective. So where's that reinvestment going? Well, take a look. Pop Jones Zero is already in over 10,000 stores. They're making a big push into the club channel. They've got these cool collaborations with brands like Crayola and Fallout. And on top of that, they're scaling their 2 adult beverage lines, that strategic HC9 THC and the new Spike Jones. This is the engine for their future growth. Okay, so next up, catalysts versus the market giants. The strategy is clear, but let's be honest, the road ahead is going to be a dogfight. It is a fiercely competitive world out there. So here's your catalyst map for the next few months. That August 20th Walmart meeting for Pop Jones, that's a huge one to watch. We're also looking for confirmation of a major club channel win. And you need to pay close attention to this one, the placement of 850 branded HD9 coolers in retail stores. That is a direct play for physical real estate in the aisle. And make no mistake, it is an absolute battle. While Jones is going leaner and meaner, you've got Coca-Cola pushing into their space with Simply Pop, and Pepsi just dropped nearly $2 billion to buy Poppy. Jones has agility, but it's fighting for every single inch of cooler space against titans with bottomless pockets. All right, now it's time for my favorite part, the next call. You see, the market looked at this quarter and saw a messy report. I look at it, and I see a strategic pivot that the market is completely missing. So here are 2 outrageous, but plausible, trade ideas. So here's the core thesis. The street is completely underestimating the impact of these cooler placements. Everyone's focused on the P&L, on the income statement. But the real battle, the one that matters, is happening at the point of sale. Placing 850 branded coolers isn't just about selling more HD9. No, it's about establishing a physical beachhead right there in the store. Each one of those coolers is like a mini billboard, driving impulse buys for their entire portfolio. It's a retail land grab, plain and simple. So the call here is an outperform rating. I'm predicting a long position in the common stock, JSDA, based on the belief that these cooler placements are going to drive a sales acceleration in the back half of this year that the market is just not pricing in right now. Now, for the wild card idea. The CEO himself, Scott Harvey, dropped this little hint on the earnings call that really got my attention about using AI in their marketing. And that leads to my second thesis, what I'm calling the AI-powered virality play. I mean, what if a small, nimble company like Jones uses AI to create a viral marketing campaign for pennies on the dollar compared to a giant like Pepsi? It's definitely a long shot, but it's a bet on achieving explosive, non-linear growth from one single disruptive, tech-powered hit. For this one, the rating is market perform, but with a big, flashing, speculative label on it. The play here is a small position in short-dated call options. Why? To capture that massive potential upside if this AI marketing test actually results in a genuine viral moment. Look, it's a long shot, but right now the market is pricing its probability at basically zero. So, after all that, what is the key takeaway? What's the one thing you should remember? It really all comes down to this. Jones Soda has successfully pulled off the first phase of a turnaround. They are leaner, they are more focused, and they have clear growth drivers lined up. The question that remains, and the one that will determine the stock's future, is whether that newfound agility is enough to win the battle for cooler space and capture consumer attention in a market of absolute giants. And as always, this is not financial advice. The information we've provided is for informational purposes only. You should always consult with a qualified professional before making any investment decisions.